So thank you very much indeed for attending now. We're going to make a start. So welcome to our webinar. Today it's with Bank BI and Priority Activator Consulting of Kenya. The subject is how are CFOs shaping the future of Kenyan banking and what are the key challenges? So by way of introduction today, we're going to be doing the webinar with the three of us. We're hoping to keep it as interactive as possible throughout the session. So please feel free to raise a hand and ask questions, and I'll tell you how to do that in a moment. But first of all, to do the introductions here, I'd like to present Eric Ngala, who's Managing Partner of Priority Activator Consulting in Kenya. Eric, welcome to the webinar.
Thank you so much, Connor. Thanks so much, Graham. Good afternoon from Kenya, Nairobi. Thank you. And good afternoon, the rest of the guys, depending on where you're at.
Yeah, we've got quite an international audience today. So there's a lot of people from Kenya, also a lot of other people from different parts of Africa. So I think there's a general wide interest in this subject matter. So thanks very much, Eric. And I'd also like to present Graham Goebel today. And Graham is the Chief Executive Officer of Bank BI. So Graham, thanks for joining and welcome to the webinar.
Thank you, Connor, and good morning, good afternoon, everybody. We look forward to the next hour and your company. Thank you very much indeed.
My name's Connor Blake, and I'm a Director of International Business at Bank BI. So I spend quite a bit of my time talking to banks, particularly in Africa, and obviously discussing some of the themes that we're going to cover on the webinar today. So what we're going to do today, just to run you through some housekeeping rules, we should, over the next 45 minutes or so, we'll be covering off a series of slides and themes. We'll be talking individually with us, Eric and Graham and myself on and around the topics that we're talking about. So when you're in the actual dashboard, you should see a panel which is going to allow you to, as a participant, an attendee, you should be able to raise your hand on that. So if you have a question or you'd like to contribute to any point that we're making on the webinar, then by all means just simply raise your hand. An alternative is to submit a question to us specifically, and then we can try to keep a view of that and then bring that question out as we get into the particular topic areas. Equally, we'll be asking some questions, so there'll be a series of poll questions. They're really straightforward, so I'll give you the warning of that. I'll show you what they are. I'll take you through the question, and there'll be multiple choice answers. And when I launch those, then they'll come up on screen, and you'll be able to make your selection on that. So what I hope to do there is that based on some of the responses, we'll be able to also discuss and incorporate those responses into the topics and the themes today. So I think with that, we're going to be recording the webinar as well. So you should be, after this, you'll be getting a copy of the recording. I'll also collate the poll results with you and share all those with you, and you'll get a copy of the presentation material as well. So I think with that, I'd like to just move on to now pass over the baton to Eric. Now, Eric, I'll be running the webinar itself. So where there's a build or if it needs to move, please just let me know when you want to move on. And I'll pass over to you now to do the introductions to the first theme, which is the evolving role of the CFO to manage the future today.
Thank you, Connor. This is a very interesting discussion today. I mean, CFOs are running organizations, and the CFOs belong to the C-suite of the organization. But we ask ourselves, where are we at now? Where are we heading in the future? I think the past has been erased completely. The biggest question we ask ourselves, what has the CFOs, what have they been doing all in the past, and what are they going to do in the future? We know that traditionally the CFOs are known to be providing the management with reports. They will be providing management with analysis, which is largely manual in nature. And we know the period within which the CFOs have been providing this information, whether it's going to the board or the senior management for decision making. But we need to ask ourselves that where is the world going with the work of the CFOs? We so far know very well that right now there is a demand for data analysis, which is almost immediate as and when it's required, what we call on-demand analysis, on-demand reports, on-demand insights. So in the future, Connor, we can go to the next, just open up. In the future, we know that the CFOs are going to be required to actually give daily, immediate, automated insights, and insights that will help manage the performance of organizations, the performance of banks. Previously, we used to go over financial reporting. That's why you find that in most organizations will have financial reporting accountants. It's no longer the same space because data science has now managed the area of CFOs and reporting, and the CFOs and their teams. And we need to ask ourselves this question: how have we been operating and where are we going? In order for banks and financial institutions to compete in a world which already has increasingly blurred boundaries, there will be a need for organizations, banks, and financial institutions to actually start using smart devices, which is known. That is, this is where we are at the moment, where we have platforms that can actually deliver banking experience to customers and the people who are going to do business with banks. It is a time that banks must actually determine to play within their strengths. Banks around the world are regulated, and these banks are trusted by their own customers. So the future of banking, besides giving the reports, and the CFOs are going to help banks and financial institutions to actually deliver on this, is that we are living in a time where retail banking is going to be very invisible. And that's why we say it's no longer the ease of giving the report. It's actually the CFO helping CEOs to run the organizations in a better way, by saying that as much as we know our space, we need to remain invisible by offering services even to clients who are sitting somewhere under a tree. They can transact. How are we connected with the people? How do we use data to drive the organization performance, and are we purposeful? By being invincible, we see banks now fully adopting technology. Banks adopt technology to actually get deeper understanding of the customer insights, behaviors, and their needs. So these services that we are seeing currently being designed by most of the banks is actually based on data. And we've also seen that the future of banking is going to change by the distribution models. We have seen the distribution models really evolving over a period of time. Right now, we can clearly say that banks, and most of the big banks that can invest a lot of money in technology, now want to connect their customers through an invisible model that is called technology, and they can almost connect homes. You are working from home, you're operating from home, you actually transact through APIs that are open and 5G technology. Machines, people will have to grow, and they say, how do we then even, you may find that banks will be financing even vehicles using certain technology. Banks will actually be saying that, yes, you have done this, but the service that we're giving you through the customer service journey, you'll be able to actually fuel without going to the bank. There's only accessibility that you get. And we know very well that for banks to remain connected, there will be a lot of collaborations. And I think banks at this moment should not look at collaborators as threats. They are intermediaries, and the future of banking has remained and will remain interoperability. That means there is no way banks are going to work in solitude. Banks will work with other service providers, and insights, insights will actually be the next step. The data that you collect through the trust of your customers, they give you the data. If that data can be harnessed, the data can be used. And the good thing is the CFO sits on all this data. The future of banking depends on how the CFO can use data to actually drive business. And lastly, if you talk about the purposefulness of these banks to the clients that they actually serve, it should be that we live in a world where people believe that organizations should actually work and operate responsibly. We shall never miss to talk about community value that the CFO gives the world by actually getting into activities that support the society, and they live a purposeful life, a life between which the organization and the community feel that they share a purpose. The data that banks are going to collect on their own customers may actually help these organizations to create collective products, because the interaction levels of banks, financial institutions with their customers has easily changed over a period of time, where now banks can actually get responses from their customers immediately. These responses may be used to actually change, review, revise the products. Connor, next. And if you look at this, we ask ourselves the question of, are we built to last or built to change? The CFO has a huge role in organization. The CFO in a banking setup will have to be responsible checking on liquidity. How liquid are we? Do we have the deposit? What's the deposit vis-a-vis the ratios of what we lend out? How do we loan? What's the behavior of our customers? CFO is responsible for cost control. Is this changing? Yes, it's not all about the cost control, but how do we manage our expenses? The CFO is no longer going to be the person who is actually going to be telling us we need to cut costs, and then immediately people are fired and the people are hired immediately. What insights have these CFOs picked from the data that they have that can actually inform the right decision for the next steps? It's not about the cost control, but actually how about managing the cost to serve the future. CFO's role is no longer going to be told, can you manage the cost? And the only cost that we know is, one, reducing the human capital cost or reducing operation cost. What if the operational costs remain but actually become efficient? We need to ask ourselves the question. That's where data and insights help. And of course, banks operate through a funding model where it's the fund that you have, you develop the funds that you lend. If you don't have the funding, how do you raise capital for contingency measures? And of course, when the CFO is on top of the data that they have, how are we lending? What are the behaviors? Which sectors? What's the risk spread in the organization? Are we able to actually recover just in case one sector is affected? The CFO, in my opinion right now, has actually changed to be a real sparring partner of the CEO, because the CFO sits on the data. They can have deeper insights into the information that is in that data that they've collected. And if the CFO uses the lending information, the lending data, we know for sure that even product design may actually depend on their output. Lastly but not least, being that they're the people who sit and monitors this information. And what if it changes that the CFO clearly can see real data, real analysis, that the deposits have gone low? On a day-to-day basis, by click of a button, the CFO should actually be able to tell the organization that, yes, we are going to the right direction, or we have gaps that we need to actually reduce, or we need to take the next steps because of the trends that we've had over a period of time. By this time, we'll have depleted our deposits. We will not be able to lend. How do we look at the lending versus deposit, the ratios? How are we managing our cost? Are we well funded that we can go into the next year? That cannot happen when there is no proper data analysis, when there is no proper insights into the business. So the CFO is no longer the simple accountant. they're no longer the head of the department, is actually the real engine behind the business. The real engine behind performance is never on reporting. I think with this remark and the introduction, we need to look at the CFO right now and the CFOs who are here on their best bet for the future. Connor?
That's great, Eric. Yeah, thanks very much indeed for that, for those thoughts and for that introduction to the session today. So certainly, I think that matches with the theme of what we're talking about. So with the CFO as a sparring partner to the CEO and really part of that strategic direction of the business as and managing the performance of the business into the future. So I think with that, I think it's a good moment now to just move on to our first polling question of the session. So just to give everybody a heads up, this is going to be the questions that you'll see appearing on your screen. I'll launch the poll in a moment, but just to say that you'll see the question, which is, which are the biggest challenges you're facing to daily financial performance management? So it would be A, if you think it's because there's too many manual processes or reliance on Excel. It's B, if you've actually got automated access to the data, but you may not be getting the daily reports or insights you need. Or C, if you're not sure or you don't work in within a bank. So I'll just launching that first question now. So that will be appearing on your screens. And I'll give you 30 seconds or so just to answer that. So which are the biggest challenges you're currently facing to daily financial performance management? So it's too many manual processes or reliance on Excel, or we have the data, but not the daily insights, or it's not applicable, you don't work in a bank. I'll just give you a few more moments for that. And as I can see from the responses now, it's almost split equally between the first and the second answer here. So I think really those may be the case where there's slightly different challenges. So I'm going to close that poll now. And perhaps just pass that question, just to share that thought on there. So Eric, I mean, what we're seeing at the moment on there is the responses are around about a quarter of the people said A, that there was too many manual processes and reliance on Excel, but also a substantial amount of people saying that we have the automated access to the data, but we're not getting the daily insights we require. So any thoughts on those results?
Yeah, I think with that response, the majority are thinking that there are too many manual processes and reliance on Excel. It's very obvious that many organizations look at the analysis as a standalone exercise. And you know, most of the analysis that come from the staff of the organization only from one department, but that is not real data. At this point, Connor, honestly, I want to pick the mind of a few of those who are in attendance. I think just one person to give us a real comment. Anyone who voted or for A to give us a reason, and then we get another person who voted for B. So anyone to go first? We want to hear your voice on why you voted for A or why you voted for B. What's the reason?
So if any of you have would like to make a comment on that, if you'd like to raise a hand, and then I can just unmute you. So I can see that Quentin there is. No, you're self-muted at the moment, but Quentin, is that? So bear with me one moment whilst I attempt to.
Hi, good afternoon. My name is Treasure Maimbo from Zambia. I could probably share insights on both. I've been in scenarios where I've had the privilege of experiencing both responses. So with your permission, I can go.
Yes, please. Yes, do go ahead.
Great. So to address too many manual processes and reliance on Excel, is a situation I find myself in currently, where we sort of have platforms that are not meeting the current needs of CFOs / finance managers. So we're having to pretty much work off Excel to generate the insights needed to help the rest of the executive committee manage performance. So I think it can't be explained any better than I've just put it. So it's an issue to do with platforms, the absence of which necessitates the use of Excel. So we find Excel ever more increasingly needed to perform the management reporting that's needed to help business manage performance. So that's on A. On B, in my previous life, I worked for, I would say, a well-developed global bank. So platforms were really cutting edge, but the issue then is around the packaging of the data that's generated by those platforms. So whereas we were able to get daily P&L, daily funding structures or movements in your deposits in comparison to your assets or loans, it wasn't really packaged in a way that then drives meaningful insight. So perhaps it's at a surface level, or it's for a sector or segment that's not really relevant to where your strategy is pointing. So in that scenario, we found a disconnect between platform administrators or people responsible for setting up the data and the people using the data. So there's no feedback mechanism between a person like myself, a finance manager who's using the data, and the people that are creating the data nodes or data links on the platforms. So, that lack of interaction between the data experts and the people that can glean insights from that data would, I think, give a scenario where people chose B. So they have access to the platforms, but it's not just giving them the information they need for management reporting. So my brief contributions on the two responses, I hope you find them insightful. Thank you.
Thank you so much for that. That's for that valuable comment. And anyone who voted or chose point B, anyone can go up.
I think at the moment that's, let me just see if I can move this forwards. That we do have Jean-Pierre with the hand raised. Jean-Pierre, would you like to unmute yourself and if you have a comment to make?
Yeah.
Can you hear me?
Yes, we can hear you. Thank you, Jean-Pierre. Yes.
Okay, great. My name is Jean-Pierre. I'm from Rwanda. I voted B because, yes, the existence of automated data points across where I work are there. However, the challenge becomes when you have to accurately measure performance, then you need various automated processes. So the challenge becomes that when you have all these automated processes that are not connected or do not speak to each other, then you have to have, there has to be some manual work that goes behind there for you to be able to successfully get the variables, the data that you need. So that's why I voted for B. So that makes the daily reporting much more difficult. And so you find maybe the shortest possible time becomes weekly and quite often monthly because of systems that do not talk to each other. That's my contribution. Thank you.
And thanks so much for that, Jean-Pierre. And it's very obvious that every CFO would want to give insightful information as and when it's given. Every CFO's dream is to give information that can actually change the course of the organization. through properly automated processes that are giving the right data points, that are giving information as and when it's required, what we call demand-driven insights. That is what the CFO for the future requires. Information is not everything, but insights is all that a CFO would want. That the CFO is not going back to what was done in the 1900s of having manual processes and relying only on Excel, but having an environment that they can easily use and can easily expand, and can easily minimize information to give a dashboard that can actually in seconds advise the management on how the specific segment of the organization is performing, how specific sector of their lending or the specific sector or sources of funding in the organization. And we see that the CFOs are actually in for an interesting time as the drivers or the co-drivers with the CEO on the future of the organizations. Thank you.
Thank you very much indeed for that. So Graham, just to bring you into that conversation, obviously we heard a bit before we move on to the next piece here, which I'll discuss, but obviously you heard Treasure and Jean-Pierre saying from slightly different angles about the proliferation of manual processes or Excel almost as a necessity. So even if you do have some of the platforms in place, that there can be quite a lot of manual work around that that can slow things down and cause frustration. So any thoughts on those 2 points?
Yes, hi Connor. Yeah, I think increasingly CFOs are being challenged to be innovative around this area. So I think as we progress through the webinar, we can start maybe addressing how you can be innovative, how you can introduce change and what those changes look like. And I think in the coming slides, we can start getting into not just sort of framing the problem, which we've done so far, but actually looking potentially at the types of solution that can offer a way to be innovative and a way for CFOs to help drive the performance analysis in a more real-time way. So I think as we move through this webinar, hopefully we can, as I say, turn away from reflecting on just what that problem is and start looking more at how do we go about being innovative around this space.
Absolutely, Graham. Yeah, thanks very much for that. So I think to now just move us into the next section of this before the next polling question and discussion, just like to cover here really what we're seeing as raising the question of whether conventional methodologies are failing to deliver. I think that's in the context of really we're talking about platforms there earlier. There's also a lot of change clearly in the current environment that's accelerated some of these points, but really just 3 main points that we've found that there's a lot of a challenge around everything needing to change because of the challenges of having a lot of systems centralized on premises. So the constraints caused by those kind of heavily centralized infrastructure and services, which often do relate to the manual processes and challenges to give remote access to those systems. I think that's put a lot of pressure onto a number of the banks and businesses that we see out there in the various markets that we serve, not least of which being in Kenya. And then the fact of the need to support all through 2020, the scramble to support for remote working. So moving to what we believe is probably a new normal, where staff, or new abnormal, depending on how you look at it, but that staff are no longer going to be on premise. So that does drive the requirement really for decentralized cloud capabilities and be able to actually manage and help your employees as well as your clients to access the banking, the key banking services that they need to. So from a bank PI perspective, we certainly see that. We see that there's the part of the decentralized cloud capabilities is also within the CFO group and within that performance management view of the business, being able to get that daily view across the different devices and have a solution that can help you from the top down to understand what exactly is happening in your business, across your financials and across your products and your profitability and your channel and your customers, and to be able to do that on a daily basis. So as Eric was saying at the start of the proposition, that moving away from the reporting at the end of the month, or effectively looking back on what's happened, getting to the situation where you can see what's happening on a daily basis and be able to be much more agile about managing your performance and making changes that can really, avoid negative impacts on your business. Just in terms of the last year, we did take a couple of surveys which were coming out to say that with the COVID crisis, we thought at the time, going back almost a year now, that whether that will permanently affect the way that staff work and how we service the customers. And I think at the moment that probably still remains fairly true of, I think, a lot of businesses that we deal with. So that's, the moving to remote working, the access to digital channels, these kind of things as a result of COVID, I think is looking to be a permanent change in those businesses. And as a result of that, the intention of a number of businesses there was to be investing in new capabilities. I think it's fair to say that that was focused on digital and digital channels and facilitating that whole remote connection either by customers or staff. I think now it's looking at the management of the business. So from a CFO's perspective, getting the right tools in their hands to be able to manage the business performance on a much more agile basis. So there's three things that we see that can be most helpfully applied in the CFO area when you're leveraging fintech and the cloud. So there's the growing of the balance sheet, so the ability to be able to track loans and deposits by branch or by product or by loan or loan officers and by customer attributes. So that's a major part of the business. So looking at new production is really essential. So you can have a look at profitability, but also looking at productivity, and then being able to understand across your loan and deposit portfolio what exactly is happening, where the trends are, where you are against this time last year or on a month-to-month basis, and being able to take those as actionable insights, so you can actually do something about that, put that into motion and focus your efforts onto where you're going to have most effect in continuing to grow the balance sheet. From a realized efficiencies perspective, so that's really the cost and cost optimization, the ability to be able to continuously track your productivity and by looking at overheads, or for example as income and expenses as a percentage of the average assets. And there's also the productivity ratio, so starting to understand how the employees are reacting and how they're acting within the context of the current challenges, where the productivity is working well, or other areas where they may need more assistance, and looking at a whole series of those kind of performance measures, often against FTE as well, but looking to be able to monitor those costs and expenses on a daily basis. And importantly, the monitoring of profitability. So from our perspective, that implies tracking of loan volumes, for example, and rates on loans and deposits, and really keeping a close eye on your net interest margins. So I think that sort of sets us up for the idea of where we think that fintech can be leveraged best in the CFO group. With that, we're going to move to our second polling question of the day. So if you don't mind, as before, to get ready to answer those questions, I'll be launching that and it will appear on your screen in a moment. But this question is to understand whether or not your financial institution is cloud ready for the types of fintech application that I was discussing there. And it's the first answer is yes, if he has an actual strategy to use cloud-based solutions first, or it's B, which is partly, but you don't have a specific cloud-based policy, or C, that if it's never cloud, you're never going to go down a cloud route, or you don't think your institution is, or D, if it's either not applicable to you or you don't work in a financial institution. So I'm going to launch that now, so you should be seeing that appear on your screen. As before, I'll be monitoring the responses to this, so please do take your time to pick out one that you feel is most suitable for you. You'll be able to change your mind as we go through if that's relevant to you, so I'll give you a few moments just to pick your choice, having looked at the answers. So what we're seeing here is that there's, although there are a proportion of never cloud, which is interesting, so there's around 13% of the responses are never cloud. 25% are in the yes, our strategy is to use the cloud-based solutions first, but the largest proportion in that is partly. So it's obviously a mixed bag there, but we do not have a specific cloud-based first or cloud-first policy. I think that's where most people are. So I think, thank you very much for your responses there. So I'm going to close that poll now. And perhaps if I could ask Graham perhaps to comment on that. So if I just give you a quick rundown, that it's around 45%, in fact, have answered that they don't have a specific cloud-based policy when asked that question. But a good 27% of those actually do have a specific policy about that, although there was 9% who did say never cloud. So any thoughts on that based on your experience?
Yes, I think if you were to go back 5 years or more, you'd probably have found C was the highest answer. So I think it's a question of time and maturity of the cloud and adoption by the financial services sector. So I think one of the things that we see as a company that operates globally across across many countries is there's certainly a cloud wave, if you like, and that happens at different levels of maturity in different geographies. And also within the financial services sectors, we're seeing a difference between maybe at the lower end, the microfinance end, through to the cooperatives, through to the banks. So I think it's inevitable there will be a change of, a different pace for different institutions. If you're part of a global institution or group wide, you're going to have more of an investment in infrastructure, maybe with group hosted solutions. So I think, I would say that the cloud is definitely here to stay. There is a natural movement towards the cloud. As I said, if you went back 5 years, you'd have seen never cloud probably much higher than it is there. So I think that's probably in line with our experiences. I think, eventually most financial institutions will be in the first category. If you think and look at where all of the investment, R&D investment around core banking systems is going, a lot of it is going into cloud-based and cloud-hosted core banking systems. And I think that is largely reflective of the demand and the direction of travel, if you like, for financial institutions.
Thanks very much. And Eric, any thoughts on those results?
I think as well, I think I agree with what Graham said, that majority of organizations are looking at either to invest in the infrastructure themselves or use the cloud technology. And I suppose those who are of the school of thought that indeed we don't need to really invest in the physical infrastructure when we can have an access to the information online or in the cloud as and when we need it, and where the security is also guaranteed.
Yes, very good point. Well, I think with that now, Graham, I think I'd like to just hand over to you to give us some thoughts on the paradigm around buy versus build, which is, I think, a major challenge, facing a lot of the banks and financial institutions in the markets.
Yeah, thank you, Connor. I guess further developing this theme of the cloud, then increasingly, I'm finding that CFOs are being challenged to be more innovative around the area of financial reporting and performance management. I think we've framed the problem well today, by defining those manual processes, by defining those that are dependent on spreadsheets. We know that introduces risk. We know that introduces key person dependencies. We know those processes by definition are less agile and less flexible. We also know that they consume probably quite a lot of IT resources. So the ones that were in that category that had data but not the insights, they were probably heavily supported by IT to provide those data extracts and to help run those data extracts. So I think we could probably take this question of how will a CFO become innovative around this area and start saying, okay, what does the ideal solution look like? What does it need to look like? What does it need to feel like to actually be innovative in this area? And I think one of the areas to start is that it needs to be rapid. It needs to be quick. We need to be thinking about fast time to value. I think increasingly CFOs want a return on investment within the budget cycle within 1 year. We see more desire, if you like, to ensure that it's run out of operating expenditure rather than capital expenditure. Do we really want to introduce more IT heavy investment projects at a time when we're being asked to be more flexible to come up with the answers quicker? We simply don't have the time as an industry, I think, to think about 2 to 3 year projects anymore. We need to think in terms of more rapid time to value. And so the question then comes up, okay, where are we going to find those systems if we take out of the equation the need to implement into core technologies and platforms? Then we're starting to think about the cloud as a service, and the slide here is really to provoke that thought. Often when we are challenged with coming up with a solution in around financial performance, around business intelligence and analytics, I would say the kind of obvious reaction is often an IT technology-centric action, which is we need a data warehouse. Let's go build a data warehouse. Let's invest in the infrastructure to build such a platform. But actually what I found in sort of more than now 40 years of being in the industry, and I used to run a data warehousing company, so I'm well versed with what those objectives and challenges were. I think this was brought up by previous speakers, Quentin especially. It's that last mile of reporting that actually is the challenge. It's that last, what I would call mile of the analytics, the performance analysis. We may well have invested and have the accounting systems, the core banking systems. We can do the banking processes. We can do the accounting. But actually, it is the pushing and the folding of that information into the right analytics, into the right performance, into the right reports, whether it's regulatory reporting, management reporting, or simply daily performance analysis. It is that last mile of taking that data, which is very well structured, well-known data, but pushing it into those performance reports and dashboards to give us those measurements against plan, against time, against this time last year. How can we automate those processes? How can we have something that's configurable by our chart of accounts with our products? This needs to feel like our system. It needs to look like our system as a bank, and it needs to reflect our products, our services, and our customer segment. So the real opportunity here is to think about being innovative by less about building in-house or building with the help of consultants, and more looking for solutions that are out there that can be consumed as a service. And this lends itself to the cloud, where we can be more rapid, we can bring in and think about implementations in days and weeks and not in terms of months and years. So my sort of message to CFOs here as part of this journey is kind of free yourself of some of the maybe legacy thinking and thinking this has to be technology-led project. Here is an opportunity for CFOs to really drive innovation in this area without bringing in huge investment in capital expenditure projects, and start looking at those solutions that offer themselves as a service, which can be afforded out of OPEX on a pay-as-you-use service. So maybe if we move on to the next slide, Connor, we can start thinking about, okay, if we were to take on that type of service, what would the sort of deliverables be to us? What would those actionable insights be? And I think what we are seeing with these cloud-based services is that they are very adaptive to different data sets, firstly. So one of the arguments that we often see for building a data warehouse is that, well, we have a data problem, and until we've solved the data problem, we can't really solve the reporting or the automation or the performance analysis problem. There is an element of truth to that, but there's also an opportunity to actually say, you know what, there are systems out there that can take disparate data sources, that can take a trial balance out of the GL system, can take a snapshot of loans and deposit and customer information out of the core banking system, and actually can bring those together into one data model, reconcile those two views through the eyes of the financial control, if you like, balance sheet, income statement lines, and then having done that, present the information in an automated way for the rest of the organization. So in a way, these systems are bypassing the need to necessarily go and solve that data problem first. They can take disparate data sources. This is not about big data. This is really a little data problem that banks have. The data is in your GL accounting systems. It's well structured. The data is in your core banking systems. It's well structured. The data may be in loan origination, loan applications systems. It's well structured. So this is really a question of bringing disparate but structured data sources together, being able to provide a business view and present that. And that business view is often where in-house or consultant-led data warehouse projects fail. They tend to focus on the technology. They tend to focus on the things they understand in banking, at the customer level, transactional account balances. But in the world of finance, we need to think and talk differently. We need to talk the language of finance. We need to talk the language of how do we get these GL accounts into a balance sheet that actually matches the way that we need to run and view the business so that we can run the business. So the actionable insights that we really need to be able to generate in an automated way is all the things we talked about, those daily loan, daily deposit, liquidity. We need to be able to look at monthly ratios, daily, weekly ratios. We need to see new production today, wherever we are in the month versus last month. We need to see it right down beyond the balance sheet into by branch, by product, by loan officer, by customer segment. And along that journey of daily performance analysis, we need to be able to crystallize information into reports. And this is where reporting and performance kind of diverge. We tend to focus as an industry on financial reporting, and embedded in that is a certain level of performance analysis. But performance is a continuous process. Performance has to be about looking and feeding data on a daily basis. Reporting tends to be as at a given date. So monthly management board reports as at month end, as at quarter end, regulatory reports as at weekly, monthly, quarterly, yearly. So the ideal solution lets us not only meet those financial reporting needs in an automated way, but also allows us to continue on the journey of performance analysis and better support the rest of the organization with reconciled, accurate information that ticks back to the balance sheet and income statement, but can be used at a more granular level that will support the sales, marketing, and operational side and the risk analysis side of the rest of the organization. So hopefully that's a bit of a flavor of how CFOs can think innovatively, can look at these solutions, can help crystallize reporting efficiencies, but at the same time can support the rest of the organization in terms of those performance analysis needs. Maybe if we just move on to the next slide, Connor, I can talk maybe about a couple of case studies here of organizations in the region that have taken this innovative approach, if you like, to solve this type of problem. So one organization is Vision Fund International. Vision Fund International is a predominantly microfinance lending organization, part of the World Vision Children's Charity, but they do operate as a bank in a number of countries. Across Africa, they have 12 operations, one in Kenya itself. And if we were to go back 3 or 4 years, the only way Vision Fund International at that time were able to consolidate or even report in country or consolidate at a group level was by using Excel spreadsheets. And obviously that was not very efficient, were a lot of time delays, a lot of questions about accuracy and interpretation of the numbers, and simply did not give them the ability to manage a global brand and global portfolio. So by adopting a cloud-based solution in the area of financial reporting, performance analysis, and we moved forward 4 years, now Vision Fund International across 30 countries across the world, not just Africa, but Central and Latin America, Asia, Eastern Europe, they're able now to see in-country, not just financial performance, but deep loan performance analysis, right down into various client customer segments, past due analysis, profitability, sustainability. But they're also able to look at the social performance aspects of their business as well. So financial reporting is one thing, but if you are, in this case, a microfinance institution, you have a social mandate as well. You have, in the case of Vision Fund, the desire to improve the well-being of children in the countries that they serve. And they often do that by empowering women and lend women money so that they too can improve their economic outlook and therefore improve those of their children. So this social performance metric is another important aspect that maybe falls outside of the financial reporting, but is certainly part of the performance analysis of the organization. And so what Vision Fund have enabled to do, despite 18 different core banking systems across their group, multiple different GL systems, by adopting a cloud-based performance analysis solution, they've been able very rapidly to move into a global consolidation and now can consolidate data on a daily basis from all of those loan portfolios in country from around the world. Another example on the next slide is a little bit closer to in Africa is Standard Bank in Malawi. And again, I think this came up in a little bit of the discussion earlier. Often core systems are, their investments have been made in core systems. Standard Bank has made investments in, state-of-the-art accounting, core banking, general ledger systems. But the challenge is often that last mile, as I talked about, and in particular, regulatory reporting. So how does a banking operation in Malawi, for example, of a major Pan-African bank, how do they become, or how can they be innovative in around this area? When often they are under maybe group policy decisions in terms of systems. Well, one area is obviously regulatory reporting. What separates, in this case, Standard Bank Malawi from any other in the Pan-African group would be the fact that they need to report to the local regulator in the local regulator's currency and in the local regulator format. So that makes this a very much personal or local problem and project, in this case, the Standard Bank in Malawi. So this is an area where they could be innovative because it just affects them. They're able to adopt a cloud-based approach because it met their internal security requirements and needs. And they're able, therefore, to rapidly deploy a solution which is able to meet those regulatory reporting requirements, not just today, but can also be adaptive to future changes and agile with those future changes. So hopefully, just a couple of examples of how you can be innovative in this. We as a company, as Bank BI, very much are trying to deliver into that innovation thought process. We are 7 years old. We were born in the cloud. We came out of the experience of many of us working in banks for many years, and also delivering on-premise solutions in banks for many years. And if you like, we saw the light, if you like, 7 years ago in terms of where the industry was moving in terms of cloud applications. And so we've built a company that is cloud only, delivers the solution in and around the cloud deployment to our customers. And in 7 years, we've built up a customer base of more than 60 customers across 40 countries, all from a location here based in the UK. So I think that we as a company are sort of a proof point, one of several that's coming in terms of how technology in the financial industry is moving towards cloud. As I mentioned earlier, there are many, many core banking systems coming on stream, deployed in the cloud to support those cloud-only decisions. And we are as complementary, if you like, a piece to that process. So wherever you are on that journey, I think it's an ideal opportunity to examine what the cloud can deliver for your institution, whether it can be put into a strategy that doesn't disrupt, if you like, the group or the strategy at a local level, and whether through affording this through a CFO sponsored project becomes an innovative way to bring in sort of new technology into the Office of Finance to help automate that last mile of financial reporting and performance analysis. So I think I'll hand back to you there at that stage, Connor.
That's great, Graham. Thank you very much indeed for that. So we do in fact have a question here. So if you bear with me one sec before we move on to our third and final poll of the day. So if you bear with me one moment, it's just something I need to see if I can. So the question is from Aloane, and thank you very much for that question. I'll read it out. So my question is that we're in a globalized world, and we see the transformation of financial technology impact different sectors, and including the financial services and banking sector. He sees that revolution is felt more significantly by European countries, and asking, so in Africa we see that our financial institutions haven't yet adopted this revolution because the traditional bank systems the traditional banking system still haven't quite adopted that revolution yet. Is that thank you for that question, Aloane. And Graham, maybe a thought on that one.
Yeah, I think the challenge is often where do you start? I mean, I think you can be a little bit blinded by perception of where you are versus other parts of the world. And I think actually, if you look across Africa, in some countries, there's better connectivity in many countries in Africa than even we have here in the UK. So it's not always true, if you like, that other parts of the world are sort of massively ahead. There's clearly a lead in technology from the more developed parts of the world, and where finance and innovation is centered. But I think Africa has often led the way, especially if you think around mobiles and mobile payment systems and things like that. A lot of African countries have led the way, particularly in Kenya as well, where there's been an adoption of certain types of technology. So what I think is that you need to take this off in bite-sized pieces, if you like. There's an opportunity to be innovative around certain projects. We're talking today about the Office of Finance. I think the challenge in finance is how do you automate the processes? How do you paper over the disparate data sources? How do you do that without introducing high technology infrastructure costs? So I think there's opportunities to pick off certain projects and try those innovative approach, look at cloud solutions, and see whether they can actually give you that quick time to value and accelerate your institution's journey in terms of adopting that new technology.
That's very good. And we've got another question here, actually. It's from Mary Wangari. Mary, thank you very much for submitting that question. So the question is, how do we reconcile the need for the move from data warehousing to pay-as-you-use cloud services with the reluctance of regulators to embrace such technology use? And the question's around central, there's examples of central banks' approach to that with data centers.
I think there's two parts to that question. There often is internal resistance because there is a data warehousing project. And as I mentioned, as somebody that used to sell data warehousing solutions to banks, I'm quite familiar with that world. There's a lot of over-promising and a failure to deliver around the benefits of data warehousing. Largely, and this is no disrespect to the people running it, I think they tend to be more technology focused and less business domain finance knowledgeable. There's a tendency to think, let us build the warehouse first, and then we'll come to you with solutions. And I think today's world, we've flipped that on its head. We're saying, no, we've actually got the solutions for finance. What we really need to do is just collect the minimum data that finance needs to drive automation and this performance analysis. And that's a very different view to saying, let me collect all the data I can and then look for a solution. So that's the internal resistance, and that's the challenge. How can you leverage both of those? Well, data warehousing will often have created data, but not but then it will have often failed to deliver the value on top. So by combining the pay-as-you-use performance analysis systems that are available in the cloud, joining that to the data warehouse, that could actually leverage the investment very quickly and bring a value out of the data warehouse you've built. In terms of the regulators, I think there's there is certainly some limitations put on in certain countries, but I think if you dig into those limitations, they are more about the core systems and customer data. The limitations that we are aware of across Africa and other countries would not prohibit a cloud-based performance analysis solution being put in place. So typically these solutions are above the customer level, don't hold personally identifiable information, and therefore they tend to fall outside of those regulations that require systems to be in country. So I think you have to dig into those limitations. There's a lot of misinformation out there in terms of what's allowed and what's not allowed. When you think about it, any group operating across Africa, for example, by definition, must pull data, even if it's by Excel spreadsheets, must pull data together to manage the group. And so these solutions are really doing that in an automated way without the spreadsheets. So I don't believe there are the limitations at the central bank level to the types of solution we're talking about today.
That's great, Graham. Thanks very much. And Mary, I hope that was an answer to your question. We will be having a Q&A session at the end. I think at this stage, with your permission, I'd like to move on to the third and last polling question of the day. So again, same procedure. The question here is around budgeting for this. So if you're in your financial institution, whether you're currently budgeting for financial performance management solutions of this nature that we've been discussing. So it's either yes, we've got a budget this year for it, or yes, but we've got a budget, but next year, or no, you don't currently have a budget. Or again, if you're not working, if it's not applicable to you, or you don't work in a financial institution, then it'll be not. Then it'll be D. So if you bear with me one moment, and again, I will just go to launch the poll. And that should be appearing on your screen now. So again, if you're currently budgeting for this type of financial performance management solution, so yes, this year, yes, but next year, no, we don't have any budget, or it's not applicable. I'm getting some of those responses in. So within the applicable answers, I think it's a reasonable split between budgeted already for this year, which is interesting. We don't have really anybody saying that they're budgeting, but for next year. We're probably looking too far ahead with these changes that we're having in the planning. So no doubt that doesn't apply to anybody. And then a number saying that you don't currently have budget set aside. So I think with that, I shall just close that poll, and then I'm going to share the results of that poll, and perhaps just ask Eric if I could ask you perhaps just your thoughts on that. So we've got a mix really between currently budgeted for and not budgeted for at the moment, or not set aside, and then after that I'll move on to Graham if you don't mind. So Eric, any thoughts on that?
I think the results speak to the current situations around the world. The situation around the world right now is people want to live within their means or basic investments. You find that most organizations have actually scaled down their investment in technology or what they don't need immediately. I see a future where the organizations would want to invest in this because the value add to their output, the value add to their customers, and the value add to their growth will be based on how they harness, how they utilize the data that they have to inform their next moves in terms of product adjustment, in terms of customer delivery touch points, in terms of cost management and cost analysis of the cost centers, performance across the organization. So yes, there are those organizations that will have a budget which forms 25%. you have the budget to run with this, it is important for them to consider having a technology that will serve them for now and in the future. For those who do not have the budget, it is very critical that they actually consider thinking futuristically that in the next budget, is it something they want to consider having or something they want to invest, because world has moved and we are not in the same place where we were 1 year ago, 2 years ago, 3 years ago. Thank you.
Thank you very much for those thoughts, Eric. Graham, if I could just invite you to share a few thoughts on that.
Yeah, I think it's an interesting question, because if you're looking at a pay-as-you-use service and you're going to pay for that out of OPEX, and that solution is going to yield efficiencies and savings to you in terms of maybe headcount deployed to certain manual processes today, then there is an argument to say you don't actually need a budget, because this can reduce your overall operating expenditure, or at least allow you to avoid hiring more people to do other things. You could redeploy people onto more useful analytical work. So I think in some ways, the sort of budgeting thought process is almost a little bit old school in terms of systems that need to be invested in and brought on and will take time to yield value. It's an interesting opportunity, I think, again, around innovation to say, within the one budget cycle, if I can introduce a system that actually saves me money and or allows me to redeploy people onto more valuable work in terms of analyzing performance, then there's a question about, do we really need to have a budget set aside if we're going to be able to overall reduce the cost of the organization by realizing those efficiencies? So I think what my experience is that often there is enough flex in the budget to afford solutions. I think the presence of a budget is a useful indication of thinking of the institution, but it's not necessarily a barrier to the adoption of a solution.
That's great. Thanks, Graham. That's very interesting points there. So I think with that, and I'm going to just move on to take the audience through a very brief overview of financial performance management as a service. So this will just share some dashboards, some ideas, and just give you an actual hands-on feel for the application itself. So that should increase the relevance to you. So I won't be a full walkthrough, but you can please certainly ask for that after this. I'll be happy to show you in more detail. Alternatively, just send links to videos that we have. But I think here it's appropriate just to give you a view of what we've been working on over the last 7 years. And again, returning to that theme that we touched on earlier of managing or growing the balance sheet. So within Bank BI and the application that we've built, there are many pre-built reports and dashboards. And the idea is that those can allow you to monitor and measure the key metrics around your balance sheet growth or the topics relevant to that. And really just allowing you to monitor your assets, liabilities, and your key ratios. So there are financial dashboards that are going to help you focus on your positions and earnings, as well as your key performance ratios.
You're not sharing anything if you're meant to be. Sorry to interrupt.
Okay, so bear with me 1 second. So is my screen not showing? Can I just ask you, Graham, can you see my screen at all?
I'm seeing the polling questions.
Okay, so just bear with me 1 second.
Yeah, that's it, sharing.
Yeah, I can see the screen.
Okay, thanks very much. Yes, so apologies for that. Thank you very much for picking that up, Graham. That's very helpful. So yeah, just taking you through here, just what you're seeing is there's financial dashboards out of the box to cover your key earnings and your key performance ratios. Many of the balance sheet reports, those will allow easy comparison over time and against budget. And then also there's many income statement reports that report not just profitability, but also that productivity and efficiency that I talked about earlier in the session. So with regards to growing the balance sheet, the application itself, the Bank BI application, gives you a daily dashboard. So you can track your balance sheet metrics. You can also see the key income statement figures, and then finally the key ratios that you want to track on a continuous or month-on-month basis. So all of these dashboards are configurable, so you can put in there what are your key regulatory or policy ratios here, so you can continuously monitor that you're within the limits that you're most interested in. In this example here, we're just having a look at the balance sheet, and it's an all-in-one report to track all of the assets and liabilities as they flow up into the balance sheet. So again, this should be very familiar in your own chart of accounts mapped up here, so you'll be seeing your own hierarchies and product categories. But you also see what we give you out of the box is the daily changes from the last night compared to the previous date. You also see the month changes compared to the previous month end, and also the actuals versus budget variance from that plan. There's also the year-to-date growth and how the assets and liabilities have changed from the end of the last financial year. So similarly on the daily income statement, so this is designed to progressively show you how the income statement comes together during the month. So again, that's on a daily basis with the monthly changes and the changes against budget, and also the year-to-date. So you'll be able to look at the profit and loss compared to this time last year. We also mentioned that a key part of the managing the balance sheet growth is an analysis of the loan origination process, for example. And this loan funnel is showing both the quality and quantity of loan applications being made. So within the Bank BI loan application analysis, we can provide you with a one-stop analysis of all the loan applications, and that's regardless of channel or platform through which they originate. So that's an important point, that we can bring that information in from across multiple different platforms. And it shows you the total amount of applications month to date, what's been approved, what's been denied, and the reasons for those being denied. And looks at also moving on to have a quick look here at new loan production. So once the loan is actually dispersed, then the loan reports become available to you and updated on a daily basis. So in this example, we're having a quick look at the branch analysis of all loan production month to date. And that's new production in the month, and it's shown in the number of new loans, the value of the loans, and the weighted average rates of the loans. And then those can also be compared to the whole portfolio, or by the number of loans, and again the amount of the loans, the volume and the weighted average rates again. And also importantly, looking at the non-performing past due loans, all of that can be tracked from a single dashboard. And then finally, you can show all of that by your bank or your branch or your channel or your loan officer, or by product. So the views are highly configurable and highly filterable, so that you can save those as well to your favorite views and go straight to the view that you're most interested in when you're tracking the key metrics you're most important to you. So a quick look at productivity analysis and what we call about realizing efficiencies. So we start by, in this example, uploading the number of full-time employees, and that's done usually on a monthly basis. And what that does is gives us an automatically calculated productivity and efficiency ratio based upon the number of employees. So key assets or key ratios like assets per head or income per head or loans per head, all of those are automatically computed and tracked over time to see if we're improving on our efficiency and productivity. So a key ratio is also the overall efficiency ratio, or the cost to income ratio. So the components of the cost to income ratio are then charted over time, and that's really to track all the changes in productivity. So you're being able to see here, in this example, you'd have the income per head and operating costs per head side by side. So it just gives you a quick and easy way to see how efficient we are with regards to both costs and income. And then finally, just a quick touching on performance ratios and how monitoring profitability. It's a way here to continuously track your profitability. So we built, for example, a return on assets and return on equity ratios here. And we can track those both based on the current performance month over month and against a plan or budget. So being able to see the return on assets and the return on equity ratios as numbers either in a table or charted over time, we find is a useful way to analyze profitability and just to see how you're going compared to budget and plan. So we've talked a little bit about what's happened. and you can see those in the performance ratio dashboards. But really, when you want to get into see, why has it happened and how the performance has changed, that's the key thing. So being able to click, for example, on the changes to return on assets, and then being able to drill into those to get to a root cause analysis of the underlying figures that are making up the changes to the headline return on assets figure. So with Bank BI, you can easily navigate down to the key performance indicator, and then drill down all the way through to the underlying ratios, and right the way through to the lowest level of detail within your accounts. And you can do that from all of the charts on the financial performance application. I think importantly, where we've been talking about efficiencies and time savings, one of the things that we do as a result of having all of those interactive reports available to you within the financial performance application is that we can then automatically create the management reports. So those dashboards can be compiled into any number of automated management reports. So if you're thinking about your current board packs, all of these interactive reports can be calculated and put into board packs for you and automated management reporting. They can be generated as Excels or PDF files, and you can make them available directly from the application menu. But we also train the staff within the bank on how to modify and load those reports as templates in the application. So you can basically then go on and modify those existing reports or create new reports without the need to involve staff from Bank BI to do that. Of course, we're always there to support you, but basically it becomes you become autonomous in creating those and managing those reports and adapting those to what you need. And that could be any number of weekly, monthly, or quarterly reports can be embedded within the application, and with the data being pushed into those reports on an automated basis. So the end user experience is very simple. You select a date and you open a report which is already populated with data for that date. So I find this feature alone has been widely adopted by all of our customers, and it saves them an awful lot of time, many hours within the business. And as Graham was referring to, it's really it's the last mile. This automation is an example of the last mile of report generation and delivery, which really helps our customers to speed up the way that they close the month end, and helps to increase the accuracy as well of the management reports, and to do all of that with a lot less hassle. So in summary, Bank BI is an application we integrate to your core. It's available out of the box. We configure that to your chart of accounts. So we have a chart of account mapping tool that maps over to your GL system. It's cloud hosted, so from an operating expense perspective, it's very efficient, and we focus on the data that we need from your GL and your financials and from your core banking systems. So it's delivered in days and not months. And the end result is that the application is available to you on any device, anywhere and any time. And we have found, and our customers find, that saves, in terms of the cost of the annual subscription to the Bank BI financial performance management service, that has a very quick payback period, and within the budget cycle often is the case. So I think with that, just that quick summary and overview, which I hope you found useful. Again, if you've got any questions or if you'd like to know more about the application, then you can, we'll give you our contact details after this. But at the moment now, we're just coming into I'd like to run the Q&A session just to wrap up the overall webinar with by answering any of your outstanding questions here. So if you bear with me one moment, I'm just going to now review some of the questions that we've had through. So I think this one may be a question for Graham, so thank you very much for that. It's many bank staff are working remotely. Are you still able to run this sort of project remotely? Is that something you could share your insights into, Graham, please?
Yes, certainly. I mean, cloud-based solutions in general lend themselves to this sort of remote working approach. So one of the benefits we've had as a company is that a lot of our staff were already working from home. Being a cloud-only solution, our office had very little infrastructure. And what we found is that within the banks that we're servicing, probably up to about 60% of the staff were working from home as well. So the fact that we can all access the same cloud-hosted solution really lends itself to us being able to work very efficiently. As a company ourselves, that means our professional services staff can multitask across many projects within the same working day. And that allows us to best serve our customers at the lowest cost point. And being cloud only, we're focused on the business, a sort of solution rather than too much on the technology. The technology is relatively quick to implement, to load data extract files into the application, and then really focus on the business objectives of delivering that last mile of reporting and performance analysis. So yes, we've been able to work very efficiently despite obviously the pandemic and the restrictions that's placed upon all of us.
That's great, thanks very much. And I've got a question here which I'd like to put to Eric. So thank you very much for submitting that question. So the question is, how do banks or how do you think banks and financial institutions plan to innovate? Now it's ... with this, so it's a bit of an open-ended question, but I guess in the context of what we've been talking about here, it's how do you see banks and financial institutions planning to innovate with financial performance management?
Thanks, Connor, for that question. It is not how, but it is when. Because in my opinion, I don't see banks having any other option if not to invent, if not innovate, and actually look at the benefit of innovating for success or remaining to operate the way they have been operating and failed to satisfy the needs of their clients. Any bank that will actually take up the opportunity to innovate will be a success in the next very few years or the next very few months. And Connor and the rest of the team members, it's very obvious that already the big banks have taken up the space, innovating and using data to actually analyze the needs of their clients, and they're using this to actually create the best customer journeys. Sadly, that some organizations have always thought that data science is for the big boys and girls in the banking and the financial sector, which is not the case. We know that the bit of collaborations have happened. For example, in Kenya, for a long time, when now the mobile transactions or mobile platforms started, there were experiments done between the telcos and some of the banks, but some banks pulled out only to realize that it's late to come back into the mainstream, to come back into the game. By the time they're coming, they are struggling to create their own, and they're struggling to actually fit in. The banks that were early adopters to technology, the banks that were early adopters to collaborations have actually excelled and have been creating and co-creating. When you go to the issues of data and performance, any bank that actually uses this data to look at their performance, to actually get information as and when they need it, they find that efficiencies have increased. These banks ordinarily have moved from the position of being ordinary performers to extraordinary performers, because they can clearly, through the data that they have, quick data and data that is not to be manipulated physically, they are able to actually get the correct insights as per what is fed and approved in the system. There are very little errors, or there are few errors that they actually have to go run through and to correct. And that has given them a platform where they can operate authoritatively, say, this is the direction we are going, this is how our clients are operating. And the good thing with what we have now is that it's pay per use. It's not about creating a data warehouse, huge investments and all that. Bank BI, the tool that we're talking about today, for example, has created an environment where you can invest but still get value, but not with a lot of capital expenditures.
That's great, Eric. Thank you very much for that. That's, I think, a very useful insight. I think, given the time, we're going a little bit over time now, so I think probably with that, I'd like to just move to wrap up the webinar. Of course, you'll be able to contact us, and we'll be sharing all of the videos, the recording of this session, and the polling answers as well, and the presentation itself, and you'll have all our contact details on there. So if you weren't able to answer a question, or if we didn't answer all of your questions today, we will get to those in writing, or alternatively, if you have any further questions that you'd like to ask us, then you'll have all our contact details there. So for everybody on the call, if you're interested to have access to a fully featured demo system, so in your own time, be able to have a look around the Bank BI application and all of the interactive reports that are available to you, then please just let me know. Alternatively, if you'd like to book a meeting with either Eric or myself, these are our contact details there, and we'd be very pleased to answer any questions you've got, or to set up an overview session on a one-to-one basis. So I think with that, it just remains for me to thank the panelists on this. So to Eric and Gala, thank you very much indeed for your efforts and for your thoughts, and for attending this, making it a very interesting presentation. And also thank you very much, Eric, and also to Graham Goble as well, CEO of Bank BI. Thank you also for your contribution to this.
Thank you, Connor.
So with that, thank you very much indeed also to everybody who attended this. Apologies we went a little bit over time, but I hope you found that session useful. And yeah, we look forward to seeing you at our next session. So with that, I'd like to close the session and look forward to seeing you on the next webinar. Thank you very much, everybody.